All right, so I want to ask you a question. I want you to really think about it and be honest with yourself. There's no one else in the room. Possibly I'm just guessing, but just you. So I want you to think about this question. How many times have you looked at your own bank account at the end of the month or the beginning of the month, whatever, and you start asking yourself, where did all my money go? And then ask yourself, does it happen once in a while where you ask yourself that question, or is it like monthly? Like, is it all the time? I remember when I started noticing I have some serious money issues, probably about 2 years ago. So it was even before COVID, where this is when I had my home inspection business, doing home inspections. But even after that, when I stopped doing it, I was like doing DoorDash, and I was making like pretty good money every month. But I start paying attention to, it seems like I only have enough to pay bills, and I really can't do extra stuff like that or go on trips. I prefer to go on trips than just spend my money on just buying stuff. So I start just picking up on that pattern that every time there's an event coming up with like friends, money is always tight. And I'm like, okay, I'm looking at how much I'm bringing in just from the app. I'm supposed to have this much money. I know my expenses are not that high. What's going on? It took me years to realize that. Oh, okay, I'm starting to this is where I'm messing up. I was probably losing close to about 1,000 a month, maybe conservative, maybe around 400 a month, something like it just depends on what's going on. And if you add that up over the course of a year, you can already see there's going to be a lot of money. And it started clicking with me like, oh, I'm not paying attention to where I'm doing my spending. So maybe that's the situation you've been in where you're working a lot. You get in your overtime if you're doing that. You're have your full time job, your full time income, and you start to realize like, why am I always strapped for cash? I can't really enjoy myself. What am I doing wrong? Sure, I'll go out here and there, but it shouldn't be messing me up that much. But I'm gonna show you what's really going on and how to turn things around for yourself. So the message really in this situation is that it's not about your income. You're not trapped by your income. What you're trapped by is just not knowing where your money is going. You're not mapping out your money so that you better understand, okay, this is what's going on. I need to stop it right here. So that's basically the trap. It's the snare. It's subtle. You don't realize what's going on until at the end of the month, and then you start saying to yourself, okay, where is all my money? But if you're able to track it, then you, like I said, you're going to turn things around. You can take back your time, you can take back your money, and then that's basically what this episode is going to be about. So gonna get into it, but before we jump in, I want you to let me know in the comments, where are you watching from. I always like to see where my message is going. I know this is a global world. Everyone is watching from everywhere, so let me know what city, what country that you're actually watching from, and then possibly in the comment section there's going to be someone else on your same journey. Y'all can connect. Like if I can facilitate more people talking about finances and just making themselves in a better position, then I believe I'm contributing to the world being better. So that's what I want to see. And then also, if you're in a position where you're tired of guessing of where your money is going, then you can look at this video's description. But also, I'll talk about it in the end of this video. I made a business that basically maps out where your money is going. It's a forensic audit of your finances. Instead of talking about budgeting, everyone talks about budgeting. Everyone talks about like another app, a budgeting app, and stuff like that. To me, it never really worked for me, and possibly it doesn't work for you. And if you want something different that can actually give you steps on how to put yourself in a better position, that's what my business services are for. You can look at this link, you can click on that and see for yourself, and then also I'll explain at the end of this video. So let's go ahead and get into it. So welcome to Where's My Cash Flow, where I talk about and teach about how to better manage your finances, to understand where your money is going. Very basic stuff. It's the basic level of financial literacy before you start getting into the investments and doing the tricks and stuff like that. Like, let's just start very basic about how you allocate your funds and the money that you get from your paycheck. So, how am I going to do this exercise? I'm just going to be focused on the DMV because I am in the DMV. I know how much stuff costs, but you can work through this yourself as well. You want to get a sheet of paper, you can pause the video, get a pencil, pen, sheet of paper, and really work out the numbers for wherever you are. And then you got Google that you can look up stuff. You could there's just so many ways that you can get these numbers to your exact situation. So I'm going to do an example of the DMV paycheck reality. And basically, I'm just going to break down what a regular paycheck, a typical paycheck will look like in the DMV. And so I'm going to try to make this as realistic as possible. Regular, let's just say a fantasy person that has an income of $5,000. Use just simple numbers and something realistic. So someone brings in $5,000 a month of income. Now remember, they don't keep the whole $5,000. And I'm saying this because sometimes, before I start getting into finance and stuff like that, I keep always forgetting, especially when you're working for yourself, independent contractor, you gotta account for taxes. Now, taxes, usually if you're a single person, it's around 25%. Usually I just allocate 30 just so I'm not surprised and I can kind of feel like I have money coming back. But allocate, you always got to account for taxes so you don't keep that money. So $5,000 gross that you bring in. And then when it comes to taxes, take out, let's just go with the 25%. My own personal preference, I like to do 30, just take out more and see what I can do with that. But this is just trying to be a basic example. Very simple math. You use a calculator, so 5,000 times 25%, that's 1,250. And then you got a net income that you actually take home. This is your take home pay. $3,750 a month. Very simple. This math is very simple. You can do it on your own. Put your own numbers in there with your own paycheck. This is actually gonna be better so you can really see what's going on. At least just the top level. All right, so this person is making about $5,000 a month. It sounds decent, but this is when the problem starts to occur because most people think about, oh, okay, I got an $80,000 a year job or whatever, and that's how most people look at it. But then remember, you got to take out that 25%, that 30%, and then that's when it's going to start getting a little tight. So, $3,750 a month is what you got. And whatever happens to this money, is it going to decrease or is it going to increase? This is where it's up to you, and this is where you got to really pay attention because this is how a lot of people get trapped in that snare, and this is where it's going to be a bitch. I'm sorry, but this is just what happens to a lot of people. So now we got our mandatory expenses because remember, you're not going to keep the whole $3,750. You got to live. So what we're going to have for mandatory expenses, we're going to have rent. And this is just average person. So rent is going to be $1,600 a month. What's the rule? You want about a third of your living expenses going taken out of your paycheck. So, but $1,600 a month. Got a car payment. If you paid off your car, then you're good. If you can help it, do not get a new car note. Keep rolling that car until you're really comfortable financially. But average car payment is going to be about $400 because you don't want no bucket. You don't want no sorry car that is going to break down on you. You got to keep spending all your money and fixing it. And it's no, don't get newly used. I like cars that are when I used to get used cars. I mean, I still kind of do, but I would like to go for a quality brand for sure, and then I like to get the highest trim, and then the car will probably be about 5 to 10 years old. Like in today's time, like most of the cars are the same. The technology is already there, so you don't have to go brand new. But that's kind of how I like to do it. I like to get the highest trim, like get everything. So anyway, so car payment $400. Then you got insurance, health insurance, gonna be about 350 for a single person. If you got children, and obviously it's gonna be different, putting your own numbers, but it's just a basic example. And then you get utilities, and that'll be about 250. And groceries, gotta eat. This is the basic necessities. This is the mandatory expenses. So now I'm even doing the extra stuff yet. Groceries will be around 450. Prices of food is high. And then your phone bill. I know mine's with Verizon for unlimited everything is about $120 a month. So, but this is because I got everything. I'm just gonna put $100 for the phone. So now, does that sound reasonable to you? Like, just ask yourself that question. Does that sound reasonable? The numbers that I just told you, does it sound realistic? All right. If it doesn't, then damn. Okay, maybe your situation or where you're living at is different. But if it sounds reasonable, then I'm going to continue because this is where it just doesn't make any sense for me. I just can't think about it. I wouldn't expect this number, but the total comes up to 3150. Remember, your take home pay is 3750. And now, bottom line, after your mandatory expenses, that's 3150 that you just spent on mandatory expenses. So what's left over? You got $600. $600. I'm saying this over and over again so that it really hits and you start thinking. Oh, you start thinking about your own situation. You want to think about your own situation, like, hey, every month, because it's reminding me of what I go through every time back in the past. It's not so much now, but I'm just putting myself in that position those years back. I will bring in the money. I remember, I will bring in the money. I will pay maybe 4 or 5 major things. And then I'll still be short of, it's just, I don't have a lot of money left. And I'm like, damn, what's going on? But this is how it looks like. You got $600 left. And this is, once again, this is before the extra stuff. This is the mandatory expenses of what you have to pay out. Your non-negotiables. So now, this is where it gets really interesting. Where does that $600 go? So I'm gonna do another whiteboard, and we're gonna have planned expenses and unplanned. All right, and hopefully you're writing this out for yourself or you're thinking about it, but it's good if you do this exercise because it's your life and it's your money. So don't just watch, like actually participate and go along with it. Even if it's in your head, like really work out these numbers as best as you can or on your phone. All right, so the planned expenses is going to be rent. We just break it down what you got to pay. You got groceries. And then you got utilities, etc. And then you got the unplanned stuff. $10 a day goes to snacks and stuff like that. Now, it's not like you're spending $10 a day every day. I'm just using it as something general where we can track it. But if you add up all this junk food or whatever that you buy, it can't equal out in a month. It can't equal out to being like $10 a day. So that's the whole point. So $10 a day. of snacks. Let's just say you do it for 20 days, or it comes out to 20 days. You got Uber Eats or DoorDash. Let's just say you do it twice. You already know how much stuff costs with all the fees that they add on to all those meals. Amazon. Amazon was making a whole bunch of money during COVID, so people was buying. Just look at your shopping cart. I know my shopping cart. I always have at least like 1,200 in the shopping cart, but it's like mostly it's pretty much all books. So yeah, I mean, you can look at it as an investment, but I don't just buy stuff like that. But a lot of people do. All coming from China and other places. You got a happy hour. You gotta enjoy yourself once in a while, and like just maintenance, like haircuts, nails. I know it's gonna be more than this for women, but generally, just put this number. Okay, so $10 a day for snacks. This is say for 20 days out of the month. $200. You got Uber Eats if you do it 2 times. Each time you're gonna buy is good. It's gonna be around $25 to $30. I just made it $30. Maybe because you want to add in a tip as well. That's gonna be $60 in that month. If you do it twice. Amazon, just put $90. Like just all these little things that you'll buy. Maybe it's essentials, and then sometimes it's just not. Just cool gadgets. Happy hour for the month, just put at $70. Like if you get even like one drink and then one meal, yeah, and then they automatically add gratuity nowadays. So, but it can come up to around $70. So, and remember, I'm doing it in the DMV, so 70 right there for the whole month seems reasonable. And then hair, nails, etc. Like I know to get my hair cut every 2 weeks. My barber is expensive, but it's like it's not like a regular barber shop, but he charges $60. But I just put $80 for that type of grooming type of stuff. So the total after all of this, it comes up to $500 a month. That's leaving you. Remember, we only had an extra $600. So all of that, let me bring it in. All of that is costing you. That's about $500. And you don't plan for this stuff to happen. These are just the unplanned stuff. But if you don't track your money daily and weekly, then it just feels normal. It's just like you're not thinking about it. You're swiping your card. You're not using cash, and it's just like it just gets away from you until you start seeing your bank statements, or you get that email, you get that alert like, oh, okay, your bank statement is ready, and you don't click on it because I didn't click on it. You just look at it, okay, that's nice. I don't need to know. I don't need those problems. So you don't feel that $500 leaving you all at once. If you had cash in your hand and just every month it was someone will take, you'll feel it more. But because you're swiping, it's not the same thing. So this is. Let me go to the next. Let me keep this board. So now you know these unplanned expenses. It could be lower, it could be more. But these unplanned expenses, the whole point of it is for you to pay attention to what's going on. Remember, it's the snare, it's subtle. Subtle neglect always ruins everything. Pay attention to what's going on and you're going to see. And I like to do a visual. So it can really stick with you. Just to help you remember stuff. I mean, just saying it. So many people in the finance space that just talk about it, say you gotta do this, and then I don't know, they be so extra, and I get tired of listening to them. Like sometimes they have some good advice, but it gets old. All right, so I want you to take in this this picture, just take it in and tell me or you don't. I mean, obviously you're not gonna tell me, but think about what this means to you. Does this point out your own situation? If it does, let me know. Like, tell me. Just write it down in the comment section because it means I'm hitting on something. But just take it down. This is what it looks like. Remember, the 500. I'll just erase it. But the 500 in unplanned expenses. After a year, it turns to this. Now imagine what you can do with this amount of money, $6,000. So even with this $6,000, it's not so much about what you're spending. That's a big part of it, but there's something else that you need to take account for, which is your opportunity cost. Your opportunity cost is basically what else you could have done with that money. This is why banks charge interest on their money, because it's money that they don't have. They lend it out to you, or it's really people depositors' money, but they lend it out to you, and so that it accounts for that opportunity cost of not being present, of not being there. So they could have done something else with that money. But anyways, so yeah, you saw $6,000 in a whole year, but that's just the start. This is how it all goes down. And I'm gonna ask you to do something in your head. You don't have to write it down, but I want you to do this quick activity in your head. Let me do this over. If you're enjoying the video so far, please give me a like. I'm trying to grow and trying to help you out. So show your appreciation. All right. Let me do this. Let me add a title. Okay. I want you to just process this, what this looks like. Now, if I told you someone stole $60,000 from you over 10 years, you get mad. You get mad because this is how it looks like. Think about, now this is the question I want you to ask yourself. All the money you made in 10 years of just working every year, maybe like 5 years or whatever. Think about how much money you made, even if you can't think of a number, like just kind of visualize, you have an idea of how much you made. How much of that money did you waste? Now, if you could go back in time, what would you have done something differently with that money? There goes that opportunity cost. It adds up. In 10 years, some people spend way more than $100,000 on dumb stuff that offers no return back to them. So if you never track your money, you basically you just lit your money on fire. Some good advice that I thought was pretty good is you know how you can do fractional investing where you can go to one of these apps like is it Coinbase? One of these investment apps. Even banks do it too, and you could just buy shares of a company. And what this person said was, okay, look, even if you just have $5, kind of match what you spend on junk stuff, because let's just say you spend $10 on a Starbucks. If you're gonna spend $10 on a Starbucks, you should buy $10 worth of stock of Starbucks, because in a year the coffee is going to be gone, but that $10, even if it decreases, you still have something to show for it. So if it decreases to like $7, you at least have $7 worth of Starbucks stock instead of nothing. Like the coffee already left your body. So I was like, okay, that's a good way to look at it. But anyways, this situation, you can flip it. You don't have to be, just like everyone else that allows all their money to go away. So how can you avoid this? It's really 3 different steps. You don't really need to make more money. That's not going to be the situation. If you're losing money every time you make money, then making more money, you're just going to lose more money. So I'm going to give you 3 steps you can do that can save you from this trap, from the snare, I call it. I gotta write a little smaller. Hold on. Trade-offs. These are very simple steps. Very simple steps. So I'm going to give you a second to read it. Does this make sense to you? And if you're already doing this, let me know. I'm curious to see if anyone else is doing this or if there's a significant amount of y'all that are doing this. So what's the first thing? Track every dollar. Where is every dollar going? Gotta look at your statements. You gotta figure out where do you spend your money on, because also it's gonna start showing you habits about yourself that you probably don't want to pay attention to. Next thing, you gotta assign every dollar that you track from your job. If you get your paycheck, you need to start designating, okay, this part is going to go to savings, emergency fund. This part goes to the essentials, like all the stuff I need to pay for. This part is going to go to investment. This part is going to go to this down payment I'm paying for, this new car, whatever, clothing fund, wherever. Like, just give an assignment for every dollar that you have. And then the last thing is respect the trade-offs. And basically what it means is either you can have your pleasure today and pay for it later in the future, usually going to be worse, or you can sacrifice now and then live in a way that other people can't. Because at some point you're going to pay the price, and it's going to be harder when you're older. You don't want to be paying financial prices when you're older and you think you could catch back up. Like, you don't have the same amount of energy, stamina, opportunities that came around your way left. The world is changing. Things are harder, as far as especially sales. You got to be more clever. Doing business becomes more difficult because there's more competitors. Like, it gets more harder. AI is gonna just throw in a wrench in a lot of stuff. So you got to understand the trade-offs, like what's really important to you. So if you did that exercise, you're that much equipped to handle your resources, your money, because this is basic stuff. But a lot of people don't think about this. The ones that make good money, they track everything. They have their accountants, they have their people, whatever. I'm trying to focus on you. Say you don't want to spend all that money, or you don't have the money to spend on financial accountants, or it doesn't make sense. You could do it yourself. 3 things: track your dollar every day, or track every dollar. Assign your dollar a job, and then understand what are the trade-offs going to be. So you ready? This is where it starts. There's more steps and there's a lot more to do, but if you understand this, then you're pretty much on your way. And if you are ready to see where your money is going, then you can definitely go to my website. Now, all my links are going to be in the video's description. And I mean, it's easy to get to, but basically I take a different approach. I don't talk about budgeting, and I don't want to tell you what to do. I really want to focus on what is it that you want and what's going to be the logical path to get there. What are some things you're not even accounting for, you're not looking at? If you learn something from this video, this is just a part of the service that I do. We don't all know everything. And if you're in a position where your money is funny, is not where it wants to be, you need to get an outside mind to really look at what you're going through and look at your own situation. It can't be yourself. You can't diagnose yourself. A lot of times you just can't do it. It's good to have someone outside of you look at what you're seeing, and then they're going to start noticing patterns, and then they can ask questions. If I see some patterns, I'm going to ask some questions. I'm like, hey, do you notice that you're doing this? That's all part of the service. It's basically a forensic breakdown of your money, how you spend, because money is really psychological. It's tied to every aspect of our life. If you don't have money, then you're gonna be in a lot of stress. And then also it's just showing like, okay, why do you keep buying Q-tips? I don't know, every like $500 worth of Q-tips every month. I don't know. It's like, have you noticed that? You might say to yourself, "Oh, I mean, I buy it sometimes, but I didn't know it was that much." Like, just if you look at your like where your money is going and what you're spending it on, and the categories that you're spending it on, a lot of times you're gonna be shocked, and you're just gonna be like, "Oh, I didn't realize," and that's normal. That's what happens to all of us. If we're swiping the card all the time and we're not really focused on what's going on with how our dollars are being spent, that's how it's gonna get you. So now you know the trap is very subtle. And just remember, freedom doesn't start with the hustle. You have to map, you have to be intentional about what you do with your time, your decisions, and your money, and making money on purpose. So if this was helpful to you, then drop a like on this video, share it with anyone you think that can benefit from this message, this exercise. I hope the exercise was helpful. I'm gonna obviously do more of this, and I'm gonna try to make it more like just varied and just do different stuff. And then also just leave it in the comment section down below. Maybe you did something different to help you get in a better situation, or if you're in a worse situation than what you've been doing, let me know. Actually, I want you to let me know when you hear about these people that talk about budgeting, how effective is that for you? Let me know if it works or it doesn't work, or maybe you didn't follow it all the way through or you dropped off. I actually want to get that feedback about this whole budgeting thing. And then I'm not even going to talk about the investments and stuff like that, but the people that are always talking about like the Dave Ramsey types, I want you to let me know in the comment section if you try that and that has worked for you. So I appreciate you watching, and stay tuned for the next video.